Welcome to Trading Lounge and the US Indices for the 3rd of April, and starting with the SP500 here. The important thing here is that we are looking from this low here, counting 5 waves up. So wave 1 here and wave 2, there's a nice 5 little wave structure here for 1 and 2, and then another little 5 wave structure here for 1 and 2, and then you can see we've got 1 and 2 and 3 and 4 and 5 here for the third wave, a 4th wave and a 5th wave here for the third, 4th wave pulling back to the 4th wave of 1 lesser degree, and that would leave us with wave 5 moving higher here. So it may stretch up to the 2900, but just be a little bit mindful. What you're looking for is a really good support on group 2 here. So with group 2, the 2872 is what you're looking for, and also counting 5 waves up. This 5th wave here should be the same length as wave 1 here. Now the next thing here is that this situation here, if we've got this as 1 and 2 here, then we can look at this as 5 waves up here in terms of 1 and 2 and 3 and 4 and 5 for 1 here, an A and a B, and 1, 2, 3, 4 and 5 here for wave C here for wave 2. Now if that's the case, then we will pull back up here, we'll pull back to the wave 4 of 1 lesser degree, and then we'll have another move to the upside here for wave 5 of 3 here. This wave 4 will pull back in 3 waves, and then that becomes wave 3 here. So it's possible, depending on how you calculate this here, because on the Nasdaq this made a sort of a new low here in this instance, so we need to be mindful that these could be either one here, but if we should just be cautious. So counting the 5 waves up here, and exiting at this particular point here after 5 little waves here, anywhere at 2880 would be a nice place to exit. But normally they get sort of pulled up, like large numbers of magnets, they get pulled up here. But if this, yeah, we could always go along on this leg here. So that's the main point here. And yeah, so the bigger picture here that we're looking at last time was this here, where we have, let's just go over this, because with wave 1 and 2 here, and 1 and 2, and all the way up here for the 3rd wave, for the 4th wave here, then 1 and 2 and 3 and 4 and 5 here for the takes us to the 5th of the 3rd here. So all that's all probable, but I also wanted to share this count here, which is, and this is in Australia, this count, but it's worked quite well, and there's no reason that it can't fit the S&P 500 as well. So from this low here, wave 1 and 2 here, then 1 and 2, and then nice 3rd wave up here, 4th wave here, and going up for the 5th wave of a 3rd, then back for the 4th, and then up for the 5th wave here. So in this case, if this was the S&P 500, which we can look at in a moment, we'd look at this as the move up through here. We'd expect it to make a new high above this wave 3 here, which it's on its way doing. Such, so if we take this count here and put it over to the S&P 500 here, just on the daily chart, as you saw it, this is what it would look like here. So yeah, so wave 3 moving up into this space here somewhere. Obviously this never made new highs over here, so this is going to, this space is going to play a part over here. So the 2900 here is really where it starts getting it here. So we just need to allow this little top to play out here, and as I mentioned, depending on how you count this low here, we need to be conservative and take it to the 2900 or the 2880 in here for that long trade there. So yeah, if I go to the 4-hour chart here, it would look a little bit like this here, where we have, this is wave 3 over here, and this, instead of being a wave 2 here, this becomes a wave 4, and I'm not sure to put it here or here just yet. Okay, as I mentioned in the early stages, this down here looks like 5 waves, but it actually counted down in 3. So yeah, this can be sort of anywhere up into we have to take it step by step. That's the main point here. So, you know, if I'm wrong, it's okay, because we've got the trading levels. It keeps us safe. So we know that if I bring in this here at the 2880 area here, a little bit higher, close enough. But if we just take the 29 here, for instance, we can work it like this here, just giving it a bit more definition here. So if the market comes up to this space here and plays out something like this here, you know, we can go long, but we'd need that as support here to build in over here. So it's not like we're going to miss anything. We're basically trading to this space here. Then we're going to be patient in here and just observe. And while we're observing here, we'll try and figure it out. But if after a correction, if we get support on the 29, then we'll move up to the 3000 here. Because we've got support on this level of the trading levels are basically the medium level here at 2500. Normally, if a market gets support here, then then we look straight up to the next major level here, which is 3000. If this market was going to fail, it would have failed at the 2800 here, and we were mindful of that too, because if the 28 became the retested resistance, and it didn't really, it tried to get down, but it never locked in here and then went down again here. So it never put us short here in that case, because we've got our patterns that keep us safe. So you know, we would have happily gone short below here if this went up to here and then came back down through here. Then we would have been short, but it just wasn't the case. So you know, we could look to be long at certain levels. So that's what we did, and that's kept us safe. So even, you know, the Elliott Wave is a fantastic thing. It's the only thing that can put all the patterns together in all degrees of structure and come out with an answer. The problem is that we don't always get it right. Even the best people, and I've been doing this since the, you know, Elliott Wave, I think, I don't know, 82, 83, somewhere in there. So it is a slippery little sucker to pin down at times, but support and resistance, which I've developed the trading levels for, really make it like much safer and easier to pull money out of this, out of the markets, you know. Yeah, so let's just do the same thing up here as we did this 8 here is much more important than 9. This shouldn't really give us too much grief here. It's just that we've got that, you know, that resistance over there that's played out there. Don't worry about that stock. Yeah, so that's where that is at the moment. So I'll just leave it at that. Thanks for tuning in. Cheers.